Perhaps in a sense it would be an indication coming from India's biggest banker that what is your understanding of the credit cycle? Could it be a 3 to year 5 credit cycle, or this current credit cycle could just go beyond 5%?
See, as I mentioned, that the credit cycle is a function of the real economy, and the kind of positives which we are looking in the real economy in terms of the initiatives taken in the direction of PLI, and also initiative taken in the infrastructure, which eventually gives a boost to the core sector of the economy. And the other one, which is most important, is the focus on the renewable sector. Renewable sector, EVs, batteries, hydrogen. So these are the new initiatives which are not there in the past. So I think, and also there's a due focus on bringing in the global manufacturers, and India becoming a part of the global manufacturing network. So I think this is, the way I look at it is that this is going to open up multiple opportunities in the economy, and these new levers of growth will go a long way in terms of supporting the economy, and perhaps the general perception of the credit cycle that it is 3-year cycle or 5-year cycle, that perception might get defied. That's what my understanding.
So you feel that we are in for a multi-year and a multi-quarter credit cycle?
I would say that the kind of things which I just described, that actually gives me some kind of belief that we are into a multi-year growth cycle. And we have seen when it comes to economies like China, economies like Taiwan, they have witnessed a multi-year growth. So irrespective of the credit cycle, they have seen that. And that is essentially because they could add some new levers of growth in their economy. So it's almost a similar trend which we are witnessing. So I'm quite hopeful that this is going to be a multi-year growth cycle.
A solid endorsement coming through. I was looking for that answer, Mr. Khara. Mr. Khara, at the beginning of a credit cycle, banks, and especially big banks, they always benefit. Deposits are lower and lending is at a much higher rate. Now that interest rate regime is becoming benign, can one assume that your NIMs will also peak out?
Well, when the interest rate regime becomes benign, of course, the deposit interest rates may not go up much, but at the same time, even the loan book also may not witness the kind of increase in the loan rates. So having said that, if at all, I think the way things looks like in the current situation, it appears to be a long pause. So if at all it's a long pause, then perhaps the interest rate regime will remain more or less stable. So hopefully we should, as a commercial lender, the way I look at it is that it will probably give me an opportunity to maintain the NIMs and to improve it wherever there is elbow room available for increasing the MCLR, etc. But the fact remains that we have to be very, very mindful in terms of the quality of assets, and that is something which also means that the good quality assets are looking at the best of the price too. So I think perhaps a bank like us will have that kind of ability, and it will certainly help us in ensuring that we improve upon the NIMs which we already have as on 31st of March, and that will be our serious and honest endeavor too.